Hello and welcome everyone. My name is Yasir Gulfraz and I'm your tutor for UK taxation for individuals. Today we will discuss our learning outcome one, which is understand advanced aspect of the UK taxation system. Anybody is there? If anybody can't hear my voice, or if you can't see my screen, please let me know if anyone is there. Okay, so good day, everyone. In today's lecture, we'll be discuss some of the more intricate aspects of the UK taxation system. So, in we will discuss about income tax, national insurance, and scope of income tax, employment, self-employed, investment, income, comprehensive. Uh, computable of taxable income, and also we will discuss concepts of residence, domicile, uh, chargeable gains and capital gain tax liabilities to include scope of taxation of capital gains. So the basic principles of computing gains and losses on the disposal of movable and immovable property, gains and losses on the disposal of shares and securities, computation of capital gain tax, use of exemptions and reliefs in deferring and minimizing tax liabilities arising on the disposal of capital taxes assets. So anyone is there? Anyone is there? Okay, scope of income tax. Income tax and national insurance. Scope of income tax. Income tax is what we pay to the government based on our earnings. It is like a slice of your salary that goes to fund important things like schools and hospitals. Income from employment. Uh, when you work for someone, the money you earns from your job is called income, and from employment, this includes your wages and any bonuses you might get. Then next one is income from self-employment. If you have your own business or work for yourself, the money you make from that is called income from self-employment. It's like being your own boss. Next is property and uh, property and self income from self-employment and some other taxes here. If you see that here, income, property and investment income, computation of taxable uh, taxable income and tax, national insurance contributions, then exemptions and reliefs, residence, domicile and demand domicile, and chargeable, gainable, and capital gain tax, and then different types of disposal exemptions and relief for gains. So here, income tax. Let's see. This is an action. What an example. Imagine you earn a salary of 40,000 pound and receive a bonus of 5,000. So your total income would be 45,000 pound. So this includes salaries, wages, bonuses, uh, and benefits provided by an employer. Let's consider an example. This is it. Uh, income tax and national insurance. Income tax isn't just about salaries and businesses. It is also includes money from renting or properties, dividends from investments and interest. So if you get 8,000 pound as dividends, that's also part of your taxable income. Calculating taxable income. All right. So now let's talk about how we figure out how much tax you need to pay. We start with your total income and then subtract any deductions on reliefs you're eligible for. The amount left after these deduction is your taxable income. The government has different tax rates from different income level. Uh, Basic rate is, or a normal rate is, as you know, that 20%. So income tax and national insurance, income tax and national insurance, property and investment income, computation of taxable income and income tax liability. So first of all, income tax isn't just about salaries and businesses. It also includes money from renting out properties, dividends from investments and interest. So if you get £8,000 as dividends, that also part of your taxable income. Calculating taxable income. Now let's talk about how we figure out how much tax you need to pay. We start with your total income and then subtract any deductions or reliefs you are eligible for. The amount left after these deductions is your taxable income. The government has different tax rates for different income levels, which we will discuss later as well in detail. So, national insurance contributions. Can you tell me about NIC or national insurance contribution if anyone is there? Okay, we have national insurance contribution or NICs. These are like payments we make to support things like pensions, healthcare, and benefits. There are different type of NICs depending on whether you're employed or self-employed. So different national insurance classes. Class 1 are for employees and their employers. These are usually taken directly from your paycheck. Class 2 are for self-employed people with earnings above a certain amount. They are important for state benefits. Then we talk about class 3 national insurance or voluntary contribution to fill gaps in your record, ensuring you get benefits even if you haven't paid much. And then class 4 national insurance contributions are for self-employed individuals with earning above a specific level. So the amount you pay depends on your profit. Income tax and national insurance matters. So national insurance are crucial because they determine the benefits you are entitled to. This includes your state pension, healthcare services through the NHS, and help if you are unemployed or sick. Uh, then is a concept of residence, domicile, and deemed domicile. Uh, Now let's briefly touch on residence and domicile. Residence is about how much time you spend in the UK, while domicile is about where you call your permanent home. Resident status means if you are in the UK for at least 183 days in a tax year, you are residents, or if you have a UK home and spend 30 days here, you are also a resident. Spend fewer than 16 days and you are non-residents. There's a special rule if you move in or out during a year. Anyone is there? If anyone is there, please let me know if you can't see my screen or if there is an issue. Uh, domicile. Domicile is your permanent home country. It is not just about where you are physically. You usually get it from your father domiciles. When you were born, where you were born, you can charge it if you move with the intention to stay somewhere forever. So, deemed domicile, if you are in the UK for at least 15 out of the last 20 years, you are deemed domiciled for tax purposes. This affects things like inheritance tax. It means your worldwide assets might be taxed even if they are not in the UK. Any question if anyone is there? Okay, capital gain tax. Imagine uh, if you buy something like shares or property and its value increases over time. Capital gain tax comes into play when you make money from selling these things. Basically, it's a tax on the profit you make, calculating gains and losses. To calculate your gains, subtract when you paid for the assets from what you get when you sell it. If this number is negative, it's a loss. Losses can be used to lower taxes from other sales. Next is capital gain tax. If you sell shares for £20,000 that you bought from 15,000, your gain is 5,000. So computation of capital gain tax, uh, after taking away allowable deductions, the remaining gain in what gets taxed. The tax rate depends on how much you earn overall and what you sold. So inheritance tax. Anybody can tell me about inheritance tax if anyone is there? Okay. Inheritance tax is about passing on wealth either while you are alive or after you pass away. It applies when the value of what you leave behind in is above a certain limit. So, calculating transfers of value, we look at gifts and things you gave away during your life to see if they are worth a lot. So if there are, they count towards the tax of figuring out uh, tax. After considering some things that doesn't count, we figure out how much of your stuff is taxable. The tax rate changes based on what you left behind and who gets it. Next one is corporation tax. Corporation tax is a tax on the profit of companies operating in the UK. It applies to a company's profit from its businesses activities, including trading income and capital gain tax. Uh, Taxable total profits. To calculate taxable profit, taxable total profit, a company subtract allowable business expenses and reliefs from its total profit. A group corporate structure, companies within a group can offset losses of one company against profits of another within the same group, reducing the overall taxable profits. Computation of corporation tax liability after applying available exemptions and reliefs. The remaining taxable profits are subject to corporation tax at the prevailing rate. So after accounting for certain deduction, the money left, what gets taxed, the rate of tax depends on the current rules. Stamp tax. Stamp taxes, anybody can tell me if anyone is there about stamp taxes? Okay. Stamp duty and stamp duty reserve tax are applicable to various documents and agreements, including land and property transactions. Uh, Stamp taxes are like special payments made when important documents are involved, especially when buying land or property. Imagine you are purchasing a house for 300,000 pound. When you buy it, you also need to pay something called stamp duty. So this is like a tax on the purchase. If the rate is 3%, you would pay 9,000 pound, which is 3% of 300,000 pound as stamp duty. It is bit like a fee to say, hey, I'm officially buying this property. Any question if anyone is there? Okay, so stamp duty is applied to land and property transactions. Let's consider property purchase price is 300,000 pounds. Stamp duty rate will be 3% and amount will be 9,000 pound. Value added tax. Anybody can explain VAT or value added tax? Okay, scope of VAT. Value added tax is a consumption tax levied on the value added to goods and services at different stages of production and distribution. VAT registration requirements, businesses with a certain level of turnover are required to register for VAT. Once registered, they must collect VAT on their sales and pay it to the tax authorities. Computation of VAT liabilities. VAT liabilities are calculated by subtracting the VAT paid on business expenses from the VAT collected on sale. The resulting amount is the VAT payable to the tax authorities. So VAT is like a tax that appears when goods like stuff we buy or services like things people do for us are made. Picture it as a kind of tax that sneaks in at each step of making or selling things. So let's say you run a business and you sell some things for 100 pound. If the VAT rate is 20%, then you collect 20 pound as VAT, but hold on. If you spend money to make that things you sold, you can take away the VAT you paid on those costs from the VAT you collected. The difference is what you owe to the government. Income tax, employment income 45,000 calculated based on tax band. So income tax, this is a tax on the money you earn. If you earn 45,000 pounds, the government takes a small part of that tax depending on how much you earning. Could be 20% or 40%. Most often, there are two rates, 20% and 40%. Then it comes to the national insurance contributions or NIC, uh, variable based on NIC class and income. So think of this as a way to help pay for healthcare and things like that. It is connected to your earnings and the type of work you do. Then capital gain tax, share sale gain, 5,000 pound gain, CGT rate, capital gain tax. If you make money by selling things like shares, you might need to pay a tax on the profit you made. Then inheritance tax, inherited state variable calculated based on inherited inheritance tax rate. So when someone leaves you money or property when they pass away, there might be a tax on it, but it depends on how much you get. Then it comes to the corporation tax. Corporation tax, if a company makes profit, it gives a bit of the profit to the government as a tax. So company profit variable and taxable profit corporation tax rates. Then again, stamp tax, property taxes, when you purchase property, let's say amount of 300,000 pound, that will be 3%, and purchase price stamp duty rate. VAT is a very common in UK, so I hope that everybody knows very well about value-added tax or VAT on sale variable, a difference between VAT collected and paid. Any question if anyone is there? Can you guys see my screen as well? Okay. So here, certainly Jane's Financial, here we're going to discuss a case study. Let's consider a comprehensive case study scenario that covers all of these tax types. Jane is a self-employed entrepreneur in the UK. She runs a successful business selling handmade craft and has recently diversified her investments by purchasing shares and a rental property. So let's explore how different taxes applies to her financial ventures. Income tax and national insurance. Jane's self-employment businesses generated sales revenue of 80,000 pound during the tax year. So she incurred legitimate business expenses of 20,000 pound. Descriptions: sales revenue 80,000 pound, expenses 20,000 pound, net profit will be 60,000 pounds. So sales revenue minus expenses is equal to net profit. So here he is discussing about comprehensive case study, different type of taxes as they apply to Jane's financial ventures. Jane is a self-employed entrepreneur based in UK, operating a successful handmade craft business. She's also diversified her investment by purchasing shares and a rental property. So explore the various tax implication of her endeavors, income tax and national insurance. Jane's self-employment business recorded sales revenue of 80,000 during the tax year, while her legitimate business expenses amount to 20,000 pound. This leaves her with a net profit of 60,000 pound. So again, additionally, Jane earns a salary of 35,000 pound from a part-time job and receive a 4,000 pound bonus. Her total employment income from some up to 39,000 pounds. So when we combine her self-employment and employment income, Jane's total income becomes 99,000 pound. So here salary 35,000 pound, bonus is a 4,000, and total employment income 39,000 pounds. Financial ventures. Here we will talk about capital gain tax. Jane's total income from self-employed and employment is 99,000 pound. So capital gain tax, Jane decided to sell some shares she purchased for 3,000 pound, resulting in a gain of 5,000 pound. Jane decided to sell some shares she bought from 3,000, resulting in a gain of 5,000 pounds. So this gain is subject to capital gain tax, which is a tax on the profit made from selling certain assets Jane will need to report this gain and pay the appropriate tax based on her overall capital gains. Any question if anyone is there? Okay. Next, inheritance tax. Sadly, Jane's great aunt passed away and left her an inherited estate, which includes a house and valuable assets. The total value of the estate is £120,000. So in UK, inheritance tax is usually paid on estates worth more than a certain threshold. So the value of the estate surpasses this threshold, which means Jane might have to pay inheritance tax on the inherited assets. Corporation tax. Jane's self-employment businesses had total sales revenue of £80,000 and legitimate expenses of £20,000. So this taxable profit is £60,000. For Jane's self-employment businesses, her total sales revenue was 80,000 and her legitimate expenses amount to £20,000. This result in a taxable profit of £60,000. So corporation tax is applied to the taxable profit of limited companies. As Jane operate as a self-employed entrepreneur, she is subject to income tax and national insurance on her business profit rather than corporation tax. So any question if anyone is there? So here is a calculation of, corporation tax. Self-employment business had total sale value of 80,000 and legitimate expenses of 20,000. The taxable profit is 60,000. So total sale revenue 80,000 minus expenses, which are 20,000, and total taxable profit is £60,000. Anybody can explain me stamp duty if anyone is there now? Anyone is there? Okay. Jane's financial venture stamp duty. Jane decided to invest further by purchasing a property worth £300,000. VAT. Jane's self-employment businesses had total sale of £80,000 and she collected VAT of £16,000 on these sales. She also incurred VAT expenses of £10,000 on business-related purchases. When Jane decided to further invest by purchasing a property worth £300,000, she might encounter stamp duty, land tax. Stamp duty, land tax is a tax applied when purchasing land or property over a certain value in the UK. The exact amount of stamp duty she pays will depend on the property value and any applicable exemptions. Then is a value-added tax. Jane's self-employment business had total sale of 80,000 and she collected VAT of 16,000 pound on these sales. She also incurred VAT expenses of 10,000 pound on business-related purchases. In Jane's self-employment businesses, her total sales amounted to 80,000 and she collected 16,000 in VAT on these sales. Additionally, she incurred VAT expenses of 10,000 pound on businesses related purchases. The VAT payable is calculated by subtracting the VAT expenses from the VAT collected in the case. Jane would need to pay £6,000 in VAT. So Jane financial ventures encompass various tax implications from income tax and national insurance on her self-employment and employment income. To capital gain tax on her share sale, potential inheritance tax on the inherited estate, and potential stamp duty, land tax on property purchase, it is clear that understanding and managing these taxes is crucial for Jain financial's well-being. Remember one thing, seeking professionals' advice from accountants or tax experts can greatly assist in navigating these complexities. So, that's it for today. This was basically UK taxation for individuals, and we discuss different type of taxes which are applicable in UK, such as income tax, national insurance number, scope of income tax, and then we discussed today's income for employment, income from self-employment. We also discussed national insurance contributions, concept of residence domiciles. We discussed chargeable gains and capital gain tax liabilities, include scope of taxation of capital gains, basic principle of computing gains and losses, gain losses on the disposal of movable and immovable property, gains and losses on the disposal of shares and securities, the computation of capital gain tax, use of exemptions and reliefs in deferring and minimizing tax liabilities arising on the disposal of capital assets. That's all for today. So if you have any question, please drop me an email at yasser@ukversity.co.uk, and hopefully you are clear about different type of taxes. So in our next session, we will discuss more about further discussion about taxes, and by then, bye for now. And please drop me an email at yasser@ukversity.co.uk if you have any question or any inquiry. So thank you very much for today's session. See you next Saturday. Bye for now.